Then you move to offer number 2. And if that doesn't work, then you move to offer number 3. Is that a good thing? Yes. So what? We plan in advance. And I teach you how to do the homework in advance. How many of you believe homework is important? Yeah. A lot of people don't do their homework. They go look at the house. You haven't seen a house before? I'm serious. I'm going to go look at the house. I've got a lot of coaching students. I'm going to go look at the house. Why? Because I thought that's what I'm supposed to do next. No. You've seen a house before. We're going to anticipate the offer based on the information we collected from the seller over the phone. We have something called the seller questionnaire. We have very specific and direct questions that we ask the seller in script form. So it's actually designed as a script, and you just merely act sort of like you're a clerk, and you just work at this place. By the way, this is another lesson I'm going to teach you. Don't go as the owner of the company. You have no fallback position when you're the owner. You go as the field representative. You're the field representative for the company. Your job is to inspect the property and to make the offers. Good news, Mrs. Jones. I am empowered by my company to make an offer today. What I have to do first is calculate what it's going to cost us to sell your home. Could you help me out here? Out comes the cost to sell worksheet. We put it in their hands, and then we work through this process and formula and procedure together. Once we come up with the number, then good news, you already have the paperwork. Already done. So you whip out your paperwork and go over it with Mrs. Jones. Mrs. Jones, this financing that you currently have on the property has something called a due upon sale clause in the mortgage. Good news, we have the paperwork to avoid that being an issue. That's all you say? You don't have to explain stuff. Lucy. Don't have to explain nothing to nobody. Just go into that final number. Get the agreement. You've got a solution. Got the paperwork. Boom, boom, boom. They can sign away. You can even have a notary with you. You can call a notary. You can get in the car. You can go over to the bank or some other place that will notarize the deed and get it notarized. So now you have literally control of the property. Now that doesn't mean we're going to do anything just yet. We haven't done a title search yet. If there is equity in the property, if we are agreeing to pay the seller any money whatsoever that looks like a dollar sign behind it, if we're going to pay them anything, then we are going to get a title search done. So we're going to buy the property subject to a title search that provides for good, clear, and marketable title to be transferred. So based on that, we're going to close on the transaction. Now you have two options. You can close it yourself or you can close it with an attorney. Now what's cool about closing it with an attorney or with a title company is that they feel a finality to it. They feel that something actually occurred. They feel a completeness about it. So there is a psychological effect with closing with a title company. The second benefit is if there is equity in the property, then you get a title insurance policy, which is a really good thing to have. So now you've got the main decisions to make are, am I going to close with a title company or not? The distinction is there equity or not? If there's no equity in the deal, but you're going to do it anyway, and we've got reasons to do that, then we'll go ahead and buy the property. Is it Steve, right? Stu. Stu is a foreclosure defense attorney. So his world revolves around helping people to stay in their homes for an extended period of time, right? An extended period of time, maybe like forever in some cases. If we can get the bank to disappear and go away, which is rare, but it happens. And then there's other situations where the bank brings money to the table and they'll do a settlement. And so you, being the owner of the property, could get a settlement to go away. In the meantime, you could rent the property out and make a lot of income for a long period of time. Is this right, Stu? Oh, isn't that fascinating? So that's an example of a house that I would buy if it had no equity, because it's got bad paperwork, what I call bad paperwork. And there's a lot of bad paperwork out there. About 90% of the paperwork is bad, and 99% of the population doesn't know it. So what happens is the opportunity is right in your face when you're trained on looking at the paperwork, and you go, oh, it's one of those. Mrs. Jones, I think I can help you today. And you pay for the deed, $10 in some cases.
Just
to get the deed. Yes.
When you transfer the property to a land trust, does it go the standard credit report, does it change to a new owner on the credit report?
Okay, so the credit report, does it stay in the seller's name? Absolutely, because the loan is still there. So with that loan still being in place, that lender is still reporting, and they're still reporting on the number that was given to them originally. Now, there is a process, I'm not going to go into it here, but there is a process of creating another number for that trust and having the bank start reporting to the new number. So there is a process. Now, if the seller is buying a new house right now, that's going to happen at the same time. The sale to you, subject to, and the new house purchase, then that's not going to be a problem. It's when the seller buys later that they could have a problem with getting qualified for a new loan, because this existing mortgage is still showing up. Now, different lenders do different things. So certain lenders, simply with a letter and a copy of the HUD-1 closing statement and a copy of the deed showing that there's been a sale of the property, will accept that. In other words, the credit bureau makes a mistake. Does that ever happen? Only on every one of your credit reports, right? Only on every one of your credit reports is there mistakes. You think the mortgage company knows that? Of course the mortgage company knows that. So when they see the deed and they see the club, okay, that property's been sold. Check! And then move on to the next thing. Like I said, different lenders do different things. It's going to depend on what lender that seller is going to that day. And there's ways that we deal with that at the time that it occurs. Right? At the time that it occurs. So we don't want to worry about that right now. If they're buying another house right now, it's not a problem. If they're going to buy a house later, that's when there's a problem. But we'll worry about that at that time.
If the seller asks you, what would you say to them?
I would say, when you're ready to buy a home, contact us, and we will give you the proper documentation to give to your lender. Period. And it's no more than what I just said. It's the copy of the HUD-1 closing statement, and it's a copy of the deed. Yes?
Can an elderly person put their home in the land trust and do the whole thing and not end up where now the Social Security Administration or IRS comes in and says, oh, you sold your property? I mean, does that protect them from that?
It can protect you from that problem. In other words, older people can transfer their property, sell their property to the trust, and when there's a 5-year look-back period, we got to get past that 5 years now, but when we get past that 5-year look-back period, they can't come and take it and pull it back into the estate. What the Medi-Cal and the Medicaid wants to do is have any assets that person owns liquidated and spent down before the government assistance kicks in. You can avoid the government assistance simply by transferring the property now into trust and starting the clock. Is that a good plan? If there is no other reason in your mind to transfer property into trust, that's a good one. That's a great one. And it's one of the many benefits of trusts. In fact, we started a list the other day, didn't we? Hello? Do you remember the list from the other day? Of all those benefits of trusts? Lots and lots of good stuff. Well, Medicaid avoidance, or Medicaid liquidation avoidance is another benefit of trust. Alrighty then. Let's see where we're at. So, thinking about yourself, what would life look like when you can buy properties without going to banks, without qualifying for loans, without even having to get hard money? Sorry, Kurt. he gets enough business anyway. And by the way, this is a sharp cat. This is a sharp cat. He's got some really great stuff going on. You know, I just despise trying to do business with people that don't want to do business. You know what I'm saying? You've got good business to put on the table, and they've just got the no conversation going. It's no, 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 no. And I tested him. I've been testing him all week long. And he's just yes, 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 yes. And I said, but if yes, okay, I'm sold. This is good stuff. This is good stuff. So think about yourself. We can save money by not going to banks. You can save your credit by not going to banks, right? Mm-hmm. Do they have limits to the number of properties you can buy? Yeah. Yes. They say, you are risky now. You own too many properties. However, with my strategy, you're going to buy each property in its own trust. Each property in its own trust. So that means if you have 10 properties, each property, you have 10 trusts. Now those 10 trusts are going to segregate and separate the assets. So, if there's a lawsuit on one house, it does not infect or affect all the other houses. Every other house can be sold and liquidated. However, if you had an LLC and you had all those 10 properties in the same LLC, and the LLC being the owner of the property gets sued, have you got a problem? Oh, yeah. You've got a lis pendens lawsuit pending against that entity, and it makes it much harder to liquidate assets, to pay the lawyer, to defend yourself. Now think about that. If you have 10 different trusts, you have 10 different things that can be liquidated to pay bills. And you don't need anybody's permission. And if they were to file a lis pendens, meaning lawsuit pending, if they were to file that, they would only file it against the one entity that was involved. Is this correct? Yes. Aha. So now you say, aha. You mean I can put myself in an environment wherein my properties are not at risk. I'm not at risk. If I'm the beneficiary of the trust, I'm not at risk. Because as a beneficiary, I have no liability in the matter. By the way, that's protected under your state's law. The beneficiary has no liability. It's similar to a corporation has shareholders. If the corporation gets sued, do the shareholders have any personal liability in that? Only a cost of doing business, but not a personal liability. In other words, they can't come after you personally. So yes, there can be an expense to whatever the matter is, but there's no personal liability to shareholders in a corporation. This works exactly the same. As a beneficiary of the trust, you have no personal liability. How many of you love that plan? Oh, it's a beautiful thing. Now here's what's a big game changer for every one of you. And then we start to look at costs, and we start to look at savings. And does everybody understand what that is?
Yeah.
Yes. All right. Then we have plus, right? Plus annual dues, annual fees, annual tax returns. Not true with a trust. Not true with a trust. So no $800.